Alrighty. Welcome everyone who's over here. Thank you for joining us. Um, so before we jump into everything, like everyone tells you, this is definitely not financial advice. This is just from the perspective of education. We hope you guys can learn something from it. But yeah, nothing we say or write or imply is financial advice. We're not qualified for it. We're not licensed for it and all of that good stuff. So please, anything you see, just do your own due diligence, do your own DD, and do your own research before you um, jump into anything. Take it with a grain of salt or a bag of salt, whatever you like. And yeah. So this is our. I see a few names that are obviously familiar. I don't recognize everybody, but yeah, this is our beginners class. Any basic questions that you guys have, or more advanced, that's okay too. But primarily, we try to reserve it for the simpler questions, so that we can get that time in. I think people don't get that at a lot of places, and we overlook it as well sometimes. So yeah, if you guys have any questions, feel free to either get on the microphone or talk. That I would prefer it if you guys could talk, or you guys can pass it in your chat, whatever you like. Really? Everybody's really good with it today? No questions? Really? I mean, I could go to sleep if that's the case. That is awesome. I'm gonna pull a Moine. Just go to sleep.
Did you take any trades on pennies today?
Yeah, I did. I was gonna
You wanna
do
go?
that.
Could you go over one of them if
Yeah,
possible? That'd
yeah,
be
I'll do
cool.
that. So it was. That's what I was looking at right now. I was just going through one. Which one would I want to go through? And I posted MLGO on my thing as well. So we'll just do that one because it was nice. I scalped it a few times. I posted it a few times, and then scalped it regardless of what I had posted. So we'll go there. We'll go from there. So um, so this came on the scanner early-ish, I guess. This came like seven. Yeah, this came early-ish. Do like big candles. Yeah, 5:45, like 5 o'clock or something of that sort. I did not take this one. I was a little late to it. This was the part where I was almost in and out of sleep, so I did not take this one. But I got in somewhere around over here, and I think this is what I posted as well. This was my first trade of the day, which was at 7 o'clock or somewhere around there. So why did we do it? One, it came in with news that they were involved with AI, like something related to AI for them was there. Um, what was it? Let me pull that up for you guys. I wish I was more. Oh, not over here. Okay, but they had some AI news, and I think it was more related to the China AI than anything else, or something of that sort, which I saw initially. I know it never popped up over here, but we saw it related on the scanner. So it did a nice pump over here. Um, the chart on this is what something that I've liked in recent times because it is a very nice pumping stock. It has a really nice tendency to spike up. Like no matter where you see it, whenever it spikes, it does a nice, 20-25% at least. So you have good room. Even if you start like if you miss the first 5-10% of it, you can still get a good pump. You saw this huge pump back in December, which went from like 1.8 to like 9 or something of that sort. 8 and then this was today. So, good history of being a chart that, pumps really nicely, but also you need to remember that it also. Thank you. So yeah, the first one is that, I remember that this is something that, spikes really nice. So, you already have that in your head. The second few things that you want to look at is one, the free float size. So You don't want to look at the total float. You want to look at the free float. That's the one that's actually tradable. So that was about 10 million, which is, okay-ish. I like it. The smaller this number is, the better. If something has a float of 600,000, that has an easier chance of squeezing and doing really nicely. But 2-3 million is like my ideal place where I usually like it. But 10 million is not horrible. I don't remember the cost to borrow on this, and I don't think I ever checked it because just of this history and how this chart is really nice. Um, so yeah, so we're going to switch on to the 5 minute chart. 5 minute, we can even go smaller. Um, this is so the chart was already mapped out for me, right? The chart is really nice, and the fact that it really um, follows your levels as well. If you look at it, this was all drawn before. This is not today in the morning that I drew this. This is, I don't know, sometime in the last couple of months that I drew this chart, and it looks really nice. It tends to respect those levels as well really nicely. The first time that it went up, I never really got a shot at this. I mean, if I could have gotten it around the 1.8 or $2 level, this was a nice 10% over here. But then it came back down, and I love this part about it. If it respects the 60 EMA on the 5 minute, this is what I really like to see, because I feel like that always helps me identify a continuation. If you look at the 1 minute chart for it, so this is that same area. It respected the 200 EMA over here. And then once it started to go up, right above VWAP, this is where I saw the break for it. Even though there's no level over here, the level is a little bit higher for me at least. This VWAP break showed that, there was good amount of volume coming in. The same, you can see that, the volume really ended up spiking over here. So we took the first trade at $2. My entry was at least at $2. And initially it danced around a little bit over here. It kind of made me nervous. So I took some of my profit around this 2.15 level because it did it over here, even though there was no real need to panic, to be really honest. Because it came down, it was on the 9 EMA, nothing really there. I don't know why maybe I was short on sleep or something. But I kind of took my first profit over here. Ideally, I should have taken it at 2.25. The second one I should have taken at 2.67. And the last one would have been somewhere around 2.95 because I really like to take it at, those psychological $1, $2, $3 levels. Those are really nice. So I took my first one at 2.15, which again, not a good example to do. I took my second one at 2.45, which again, doesn't really make sense on this chart. But on a psychological standpoint, sometimes penny stocks do end up topping out over there. So I have this mental thing of doing that. And then I just did it. Ideally, this was a better place because this was a level. And then it topped out over here at 2.87. I think I posted this that I took some profits at 2.8 because I knew this was kind of getting to the point where it was going down. So I looked at this one, then once it started coming down, I took profit at 2.8. So this was my play. Like this was about what 20, 15, 20 minutes. We did at 7:01, I think, or 7:11. Sorry, I alerted this at 7:11, I think, at this $2 area. 7:11, yeah, somewhere around this. Yeah, this spike is what I did when it crossed over VWAP and was really nice above over here. And then yeah, we finished it somewhere around over here, 7:21. So 10-minute trade, really nice, easy, good volume throughout. Once you see this going down, you see the volume going down too. I tried doing this a second time. Um, I think I did it a second time at 2.38 because again it was really respecting this 20 EMA. So we did this over here, and I think that was around 7:45ish. I remember trying to get my little one trying to get ready, and I was trying to trade this, which is not a good idea ever. But 7:45ish, I think this was over here that it was still hanging around really nicely, and it was kind enough to give us another run up to 2.7, 2.8. I was expecting it to top out kind of here around 2.7, but I thought 2.7, 2.8 was a nice place to take profit. So that was a nice second trade because it kept respecting the trend. Now, where I kind of extended myself was when I did the third trade on it, which was a little um, over enthusiastic, I guess, because if you look at it, it kept on bouncing over here at VWAP. So I took a look at this the third time at, I don't know, I think like 8 o'clock or something of that sort, like somewhere over here. 8 o'clock that it was going up over here, so I added it around 2.7, and I remember it spiked up to 2.9 at that point, like for a very small time somewhere. Maybe it was again over here that I did it, but then it kind of like went down and never really came back, and I kind of got out at break even. So this was my hindsight when I look at it. It started to break trend over here. There was no real continuation on it. So because I think I got out over here, tried getting in again over here, and saw this top over here, and it just bled afterwards pretty much the whole time, and I didn't really look after it. So yeah, those were my trades. And again, you kind of go over these things and you keep looking at it, the mistakes that you made, and it's just it was pretty evident that it kind of broke down over here, and these were like candles that were um, more indecisive, I guess. Um, and it kind of got masked by like a little bit of volume that it got over here because this was, I think, the 8 o'clock candle. So you kind of get faked out by it, I guess, a little bit. So this kind of gave me a little bit of confidence that it might come back, and then it never did, and then it kind of bled after that. Even though it was on the 60 MA, but never really broke VWAP. And you have to remember, like the entries that you take place based on whatever you take your entries on, right? You have to respect those um, levels, indicators, whatever you want to call it. You should still try to respect those and watch them closely because that's what you started your trade on basically. So that's what I guess didn't in the moment look at it that it was starting to go down. I got out with the teeth of my skin, but that was about it. Does that make sense?
Yes, thank you so much.
Ronnie said for me. Ronnie, do you want us to unmute you? Ronnie, you're unmuted, by the way. You can talk. I don't know. Ronnie doesn't want to talk.
Hey, what's your take on the SPY?
What's my take on the spy?
Yes.
Not nice. We'll take a look at it. So I mean, today was a weird day, right? Like it's one of those days that doesn't make sense, to be really honest. Um, and it's your how do I phrase this? Um, Sorry, there are like a lot of lines. I don't even know how to remove all of these lines, but I will try to explain it to you guys. So I'm assuming everybody read the news, right? Like this sell-off was which started last night, which was horrible to say. We saw this in the futures. It was literally bled all night, and then obviously opened ridiculously low. Was all based on the fact that another country has a better AI product than the U.S. and every large company in the US, like every mega cap company, like, whether be it Amazon, Facebook, Google, Microsoft, Apple, whatever, like everybody's utilizing our technology, and if somebody has it better, then, we are royally screwed. That was the sentiment today.
Better and cheaper. Don't forget
Better,
that part.
better, cheaper, more efficient, right? Better in every way, right? Like it's more efficient, it does things better, it consumes less energy, all of that stuff, right? But that said, it it's it raises two questions. One, um, are we really that bad? One, is our AI really that bad, right? That and they're so much better because I have no idea on it. I really have to read up on it as to what benchmarks they followed, what they did. I mean, I'm not an expert on it, and I don't think me reading up on it is going to make a huge difference to anybody. But the second question that it raises up is that what is our valuation of SPY based on right now, right? Like, if a single product in a different country can influence the market so much, then do we have a foundation for where we stand right now? So that's the big question, right? In my mind, at least, we should not have bled, 4% or 3%, whatever QQQ did last night, 3 or 4%. just because of the fact that somebody has a better AI product on it. I mean, it's not that we have a horrible product, from what I understand. It's just they have a little bit better and a little bit cheaper and all of that stuff. So, it,
No, we're also putting a lot of money into development of AI, and they've
yeah,
already caught up, right? So
yeah,
it's like where is that money going to, and are we like giving a higher evaluation for these mega stocks
yeah,
than they're actually
yeah. So that's the thing, right? Are we frothy, right? It just puts you in that, or at least it should make you think that, right? Like if something is reacting that hard, something is going wrong. Now the question is, for me to really make any sense of this, um, I would look at the next day or two. That's just me, how I evaluate it, um, to see how everything reacts to it. We have a huge earnings week, right? Like we have every big company almost, like all those big five big tech reporting this week, or at least most of them reporting this week. So that's going to influence a lot of stuff depending on how they provide guidance, what they provide with their AI stuff. I think all of that stuff is going to play a huge role. And then obviously FOMC comes in, and I know FOMC is not responsible for what happened today, but I think overall, like those big companies which basically led to the meltdown, and I know Nvidia is not a part of it, but everything else kind of you know melted down today as well. So in my mind, I would look at the next few days to realize what this means going forward. And as usual, I mean, I would just look at the levels that we have and play off those. You have to just follow the money where it goes, right? Um, does that make sense?
most surely. And if anybody is also looking at in regards to the whole flush that we had with the OpenAI, another ticker to be mindful of is Meta. They're obviously partnered with OpenAI, so you may see more of a recovery in Meta, as opposed to Nvidia, which is just supplying I guess the hardware for that growth, but majority of the downturn was based off of the fast growth or faster growth than our own growth, right? And we've poured in much more money. And another aspect that I just wanted to comment on within the zone was in Europe, there's only one other AI company that is of any influence, um, and it's a it's not even, you can't even compare it with Nvidia or OpenAI. That's how I would say, they're not even in the same boat as OpenAI. Meaning that not only did this news affect us in America, but it also affected Europe, which is right there, like right, it's like 80% of the market going into the, like, money going into the market, right? You have all of our money is like twice twice or three times more than everywhere else. And then on top of that, you have in Europe also having its influence. So when we had the huge run up in China stocks overnight, that led into Europe also losing confidence in us, and then us having lower confidence in the inflated prices of our own stocks. Right? It kind of shows that we're looking to have some type of correction, or at least take another look at how we evaluate our stocks. Right? For primarily stocks like Microsoft, where most of any major ETF, they own a large portion of Microsoft, right? Um, and it's basically showing that Microsoft partnered with OpenAI as well, and they're trying to integrate it more into Windows. They have their own somewhat version, but it's still, the software still comes from OpenAI, and it just kind of shows that, are we overinflating this? Is the actual cost or money that we're putting in giving us the same value as compared to this China AI stock, or this company that has had considerably less money than us and have already made such cleaner advancements than we have in the same amount of time in such a short time. But yeah, that's
Yeah, no, and obviously there are big things that are reporting over the next few days, right? Boeing's gonna probably post a huge loss tomorrow. Um, I don't know why I thought Boeing's was already reported that loss, but Boeing's I think earnings are tomorrow morning. And then Wednesday is like the really heavy day, where after hours there's Tesla, Meta, Microsoft, IBM. These four big, huge like companies, T-Mobile going
yes.
together, and then after that it's on Thursday is Apple and Intel, I think, and Visa.
Don't forget, Nasdaq is actually having theirs before the open of the market. So
Oh,
before we even walk into FOMC, we have our major indicator of U.S.'s technological advancements providing information based on, are we wrong? Are we wrong to over-evaluate in the cost of our stocks? We will see on Wednesday. Because if we don't see something good coming out of it, I couldn't imagine, it would be good for tech. A run-up would be, if it did happen with FOMC, it would be all pertaining, more of the financial sectors as we saw last week, which was carrying the market for some time,
hmm
at least in the earlier times of the week before tech stepped in.
yeah. If you have any specific question to Spy, you can ask us. I mean, if you're asking general, about it, I don't know what else I can tell you. Because to be honest, I don't evaluate Spy. I'll be really honest. I don't. I just look at levels, what happened over the last couple of days, and if I have to play an option or something else, I just play it based on that. Because there's just, too much. Like my evaluating Spy is not going to make a huge difference. I can only evaluate the price action, what has happened over the last couple of days, or maybe a week or two out, basically, and what's to come ahead. That is what I look for. And I know everybody has a little bit of a different way of evaluating that. So, ask your question, like if there's something specific you're looking at.
It's a good point. If you don't mind, I want to comment on what you said there. Was especially with a week like this. This is a perfect example of us just kind of watching price action and just playing off of what SPY is doing right now. Because as you see, we opened on this massive gap up on an area where a lot of retail traders weren't even able to exercise any trades there, right? We just started dying off. If you were in early and you got lucky on a put that was, let's say 600, which is, a solid, I would say, area where you could think of a pullback happening. And then us going $8 down from there, that was just luck, right? You know, so right now with all this news coming out, it's going to be very volatile. We could easily go back up to 610 and then the next day go to 580. It's price has that room to move this week. It doesn't necessarily have to, but it can with the large influx of volatility that we have going into the week, going into the news. So the best thing you can do is just play price action for now. Try not to worry too much about what you expect as far as technicals on a future aspect of where you think SPY is going to go. Um, I mainly will post things around SPY just because SPY is, you can classify it as the U.S. market's main indicator for overall price action in the U.S. market. That's primarily why I watch it and I study it so often. It kind of gives you a glimpse of where the rest of the market's going. You can also, if you look at let's say a QQQ, it's more you'll see if QQQ is leading SPY, meaning that it's going up at a faster rate than SPY. You can assume that we're in a tech-heavy market. Um, and when the inverse is true, which was for a little while now, where SPY is leading quite a bit, you can safely assume that it's leaving that risk on mentality, which is tech, and heading into more I would say safer assets. Healthcare did well. Our financial sector is doing well, and then we have news based on financials. So the rate cuts may not, initially reduction of rate cuts are going to shoot. Rate cuts are going to help tech, and SPY will go up, but rate cuts will also help the financial sector, so SPY will also go up. So
Yep.
it's really important to know those things.
Yeah. Small cap's gonna go up. Like it's gonna be a lot of stuff that's gonna like if that happens. But it's just too much to speculate. Like when it comes to this week, I mean,
Yeah, I agree
there's just so
100%.
much that wild swings are gonna happen because I'm pretty sure Nvidia already recovered 3%. They're gonna recover a couple of more percent tomorrow. You're gonna see SPY, even in after hours right now, you're gonna see SPY recovered like in the last hour before close. This was a nice push, like on the 1 minute. And I wish I was trading futures at this point in time, but this was like even on the 1 minute there was no red candles. This was like literally just went from in the last 6 or 7 minutes. It was like a push, 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 push all the way up.
Yeah,
Uh,
and then you have Meta going recovering,
yeah,
and then going up another 2.5% in the morning, and then closing near that high again.
yep.
So
It's just too much to speculate. Like I guess like from right now standpoint to the end of the week, I wouldn't even like attempt to say anything. What else are we thinking? What else? Did anybody trade anything interesting? Did anybody look at anything interesting? Had anybody tried futures? Like if we're not
No,
talking,
no, I didn't. I haven't tried future, but I was looking because I was trying to figure out like when I was watching the video and like we got levels for like that I don't know if it's the name of the brand, but it's like Mara, like Mara. I was trying to like pay attention to that because I had did some options in it like 2 days in a row and I did well in it. So today I was just trying to rinse and repeat that little thing I had going, but because the market like dropped so crazy, like I didn't know w- um like what to do because like I didn't know like exactly like how to reestablish like levels after it dropped so drastically,
yeah.
if
So
that makes
levels
sense.
are levels are basically right. What we do, or what most of us do, is levels are basically where price is supported, right? Like if you look at it, I haven't traded Mara in a very long time, so this is from a while back, I'm sure. But levels basically are where price pivots, where price supports, all of that stuff, right? The problem with a day like this is that you don't know where something's going to stop. That's the only question. And when something drops that much, you don't know where it's going to reverse and where it's going to start going up again, if that's the case, right? So it's a little difficult to evaluate that part of it for a day like this. It might just be easier not to touch something like it. But if you look at Mara right now, like this is on a 4 hour chart, so that every candle's a 4 hour, right? If you look at it from here to all the way to 12/19, so about a month back or so, like more than a month and a half, almost, we've been kind of range bound from this 16 to $20 range. We go up, we come down, go up, come down, go up, come down, go up, come down. Like we're kind of caught up in this moment, I guess. So it's a nice, I mean, if you can get in over here and have the patience to hold it, it was a nice thing. It kind of kept getting rejected over here, the 200 EMA on the 4 hourly, 200 EMA again, didn't really hold it. 200 EMA tested it again, but got rejected down from it. So, you got to watch those levels, and if you can trade it off it, it's great. Mara has dissociated now from Bitcoin. Otherwise, Bitcoin used to be a great indicator, obviously, of it spiking, but both Mara and Riot have kind of separated out more and more as Bitcoin has become more of its own entity. So they follow the market as well to a certain extent. So you have to keep both of those things in mind. But that's how I would have traded it. You kind of have to go back sometimes and take a look at it, where things are going. On a green day, it's easy to trade most things, right? Like if everything is green, Generally, Bitcoin will be green as well if your SPY is like really nice and green. Generally, unless there's like some other news related to it, you'll see a small push with it as well, and you'll see a push with all these mining softwares as well. So it's easy to trade there. It's just one of these days where it's a little bit more difficult to predict what they will do.
Okay, cool. That makes sense because I was really like, because I didn't make any trades in it today because I just had no clue, and I was like, I don't want to. As soon as I get in, it like reverses or something.
Yeah.
I
Well,
was, you know.
yeah, you're absolutely right, right? Because so the market made a little bit of a push, like we saw like earlier, like it made a little bit of a push initially, and then it went down. Now you don't know where you even have taken a put over here because the whole market was melting down. Maybe if you wanted, like at the break of the 18 level, you could have maybe taken a put over here, and you could have ridden it down. But the problem with this strategy is that you don't know where the bottom is, right? You could maybe correlate it with the market itself, maybe, but you're expecting that your level was somewhere over here in the 16s. Now you can look at a shorter time frame and maybe identify a point where it was, but it doesn't always add up perfectly. So 9 out of 10 times, I always recommend people to, not touch stuff on a day like this. One day, sometimes you have to realize that, cash is also a position, right? Losing money is your first objective. Making money or not losing money is your first objective. Making money is your second objective, right? Especially when you're a beginner trader. Um, Losing money is a part of the process, but sometimes when you on days like these, these come around, once every couple of months. If you don't trade one day, that's okay. Like the last, I think 2-3% day was back in August, July, August, when we had the big pullback, um, where Apple sold off like six. Apple was down 6% that day. It was a lot of uncertainty that day. Like we get one or two of these, or maybe two or three of these a year. That's okay not to touch anything at that point.
Okay,
IWM.
cool. I just had to confirm that because it had me thinking about it all day, kind of.
Yeah. How do I measure percentage over here? There's a way to measure. Oops, not Fib. Data price. Yeah. Funny enough, IBM was down. Not that bad, right? 1%, 2% maybe. That's not bad at all. Nice. Okay. Alrighty. Any more questions? Anything you guys traded that didn't make sense today? Anything that you did really great? Anybody had any 1000% gainers? Somebody has to have some NVIDIA puts that they were carrying. Come on, show me. No. All right, I'm going to give you guys a couple more minutes. If somebody has a question, feel free. Throw it out there. If anyone is server muted, if you can't unmute yourself, you can let us know. We'll unmute you. See, like somebody else was, right? Yeah. Yeah, that struggle is real, to be with your kid. Oh, you're muted.
Yeah, you're muted on your end. I won't be able to unmute you there.
Try it now.
Can you hear me?
Yep.
Yep.
Yes. Hi everyone. So my question for you is, I usually jump in at 4 o'clock in the morning watching the robots and trades, and I watch you go in real quick and make scalp and jump out right back out.
Hmm.
Um, how do you determine to jump into those trades? I mean, you can try to go draw the line, and by the time I'm done, the trade is already going down.
Yeah.
So
So
like, I'm just trying to understand what am I doing wrong in
you're
my
not
case.
you're not doing anything wrong if that's what you're thinking. No, you're not. So part of the deal is that most of these stocks that we trade, or some of these stocks that we trade, have popped in before multiple number of times.
Mhm.
Were you here in the beginning of this when we started out at 7:30, or did you join a little bit late?
No, I joined a little bit late.
Okay, so we would discuss this MLGO, and I think I had sent when I took this trade, I kind of sent those notifications out as well. We traded two or three times, I think. The last
Yes.
one didn't really work out, but the first two did, which was really nice. So what I look at is, the parameters are kind of the same for me every time I go into a trade, right? I want to look at a stock which has a lower float, which means that your free float that's over here, which means the amount of shares that are being traded is less, because what that makes it's a scarcity of shares, I guess, to put it very simply. So if there's a lot of interest, more people, and if more people want it, then it's the stage to pay a premium for it comes out faster. Let me put it this way. So the chances of price going up faster is comes earlier, right? The chance kind of increases out. So low float, high cost to borrow, and something which has volume, like lots and lots of volume. Because
Okay.
if you don't have volume, that means people are not interested in it. That means most likely the price is gonna, go up a little bit, but come back down a little bit, and it's easy to manipulate the price of it as well. If somebody puts a order for 5,000 shares when it's only being traded like 10, 20,000 in the last 10, 20 minutes, that really tanks the price down. So that's what I look for, right? So MLGO is something that I'm sure, like, if you stay around the scanner for 2 months, you would see that this pumps, every couple of months, 2 months, 3 months, and we were looking at this 4-hour chart. Oh, like that. Hold on. Okay. So the 4-hour chart on MLGO is absolutely wow. Okay, so it looks like this. Jesus, really became small. Okay, so this is what it looks like right now, right? And you could look at the daily chart if you want. That kind of looks the same as well. Jesus, what is wrong? Okay. So this is what the daily chart on MLGO looks like, right? It has a
Mhm.
really nice tendency to spike, right? Like if you could just click on the daily chart on your phone or something, you'll realize, yeah, it kind of, spikes every couple of weeks, every couple of months, whatever you want to call it. So this was October, this was November, this was December, and now it's coming back again. So about a monthly basis, right? Every month or so from its baseline, it's going to baseline pump, this form the baseline pump, kind of baseline, and kind of started pumping again. So you realize that this is one of those things that's going to go up, um, at least a decent amount, right? The 4 hourly chart is what I really like of it. I generally go back and take a look at it as well. You'll see that even in those middle of those huge spikes, you'll see that you got them nice $3 to 4.5, which was about a 50% pump, like 1, 2, 3, another huge one over here, and then this was today, right? So you know that something has a history of pumping. So that's a nice thing to look at. And then when I go back to today's price action, um, so I was too lazy during this point in time. I tried trading something around 4:30, or 5 o'clock, and then I was too sleepy in this middle part, so I kind of missed this section of it. And then when I started noticing again was when this started to cross over again, and when it crossed over Weevop over here. So this is, I think, where I took the trade on the 1 minute. Let's go back on the 1 minute, because that is where I was looking at. So yeah, so this is the part that I kind of missed, which was at 5 o'clock in the morning or 6 o'clock in the morning. This is where it really started to move up, and you see how the volume was low, low, low. Like the volume, by the way, you see it over here, right? This actually tells you how much shares were traded every minute or 5 minutes, depending on what time frame you are. If you look at it, shares being traded was in the couple of hundreds, maybe a couple of thousands, 2,000, 1,000, 3,000, maybe somewhere of that sort. And then all of a sudden over here, you start to see that it moved to 10. This is 11,000, 10,000, 47,000. So this is where you know that like a real influx of volume is coming in, right? And you see that because it goes above VWAP, which is volume weighted, right?
Mm-hmm.
So this is where I took my trade. Like once it crossed over, this is where I entered on this spike because it went up, stayed up, kind of over here. I saw that volume was constantly increasing. This is where I took it. And then I was telling to everybody over here that I kind of got spooked out for some reason. I don't know even why. I took some profit over here, which is technically not the right point because you have a level nice here. I should have waited at this 2.25 level, which is also kind of in penny world, kind of a small psych level, right? Those 2.25 and 2.4, 2.5 are all those like 0.5s are those psych kind of levels. So I should have taken over here. This one, I kept it over here, but these candles were so nice that I ended up taking the profit at 2.8 when it kind of topped out over here. I was like, it's not going up further. Like these are all 1, 2, 3, 4, 5, 6 green candles. If there was a 7 green candle, I would have like kept on moving my price target up. But when I saw that this was topping out and it came down and it fluctuated a little bit, but at 2.8, I think I took out most of my position. So my criteria was, apart from what I look for in every stock was this volume influx that we saw really nicely. And once that is there, I take it when the volume influx comes in. Once the volume starts to go down, this is where I usually like to exit out. I don't like to challenge this part because I've gotten burned too many times that, it might go down a little bit or it might form a bull flag and then it's going to go up. That I've been burned by too many times and by greed and all of that stuff. If it starts to go back up again, you can always buy it a little bit higher and, sell a little bit higher. That's okay.
Okay, thank you. I understand.
Yeah, and then we took this again. I took this again a second time. I'll show it again because, it was nice. You get to see these things sometimes, not always. Even on the 1 minute, actually, it respected it really nicely, right? Yeah, so on the 1 minute as well, it respected the EMAs really nicely, even though it went up. So, I know it came down over here, but it stayed on VWAP, it stayed above the 60 EMA. So we took it, once more, somewhere around over here, around 2.3, and then it jumped up to 2.9. So that was a nice little trade as well. So that was good. So those were like that. Those are things that I keep on looking for. For me, volume plays like a huge role. If I see something dying down, I will not hesitate to cut out of it. If it goes up after that, it's okay, you missed out. But I've lost more money than made money trying to wait. So now I just don't. And then Kamran, what did you say? Can you show?
Thanks again.
You're welcome. Can you show your volume on 1 to 5 minute chart because it's showing very small volume bars? Okay, yeah, so the volume bars are relative, right? Like this 8 o'clock bar kind of destroys everything. The volume is this, like these small ones. But when I move this over here, you see how this kind of becomes much bigger, like in relative. Like when you look over here, these were all comparatively now really small. If I move this away, these start becoming larger as well. They're all relative, so it's kind of difficult to see. But you actually have to look at the number as well, right? The number is right over here on this. It tells you what number, like at 1 minute, what number was traded. So for me, doing this, taking a look at this, that there were 1,000, 2,000, 3,000 shares, and then moving up to 10,000. Like if you take a look at it, it's 10,000 here, 11,000 here, and then jumps up to 50,000 here. So you kind of realize that with it. Any way to zoom volume bars? I have not found a way. I'll be really honest. I just keep it like this. It's usually easy to see right now because you're kind of going like this and you'll see like this huge spike up of this bar comparatively when all of this is not here. So it's really easy to differentiate it at that point in time. Does that make sense, Kamran? Okay, I hope it does.
It made sense. Don't worry. You actually put it a little bit better than myself. I like that relative volume because that's technically really a more, I would say, informative way to say it rather than the average of the area, which is kind of what relative is, but relative is better than saying average,
Yes.
100%.
Good night. Could you please show me how to turn on alerts in the Discord? Oh, how to turn on alerts? Like volume? Like when it reads it out?
You're unmuted too, so if you have a
When you're placing a trade,
Yeah.
I don't see the trade until it's done. So how do you turn on the alerts to be alerted when the trade?
I don't. I mean, it should like give you. I don't know how you can do it. That's a good question. Like maybe I could tag you guys. It's just it feels really not a great idea to tag like 700 people at 5 o'clock in the morning. I'm sure I'll get
well,
more.
there's a, I guess you can somewhat make it easier. If at the top of the server there's an intro section. In there, you'll see custom roles. If you so add a reaction to the small cap role, then you'll get the role small cap. Essentially, he can add that channel without worrying about adding everyone. And if you are, trading small caps, you want to be on top of those alerts. That's something that he can definitely do without having to worry about adding everyone. But
Okay.
you need people to actually um, choose that role, right? Because otherwise we'll be alerting no one.
Okay.
Mm.
Alrighty, we'll try sorting that out. We will do that. I will take a look at it.
Yeah, I'm gonna post a message in general shortly after your live as well,
Yeah.
just to remind everyone.
Yeah, I know it's kind of difficult when me and Moin and Smooth post these things. It's not as easy um, to find them. Um, Come on, what did you post? Yeah, I understand. I do. I think are you looking at it on your phone?
Yes.
Okay, so you probably have a volume bar, which is huge apparently on some side of your um, screen, like where you've not posted, like on the sides. There's probably a huge candle, which is kind of making it look, um, making the rest of them look smaller because it's all relative in Smooth's word. Can you see my screen?
Yes, I can see the screen.
Okay, so when you see the screen, you see like when this 8 o'clock, unfortunately, when this 8 o'clock one comes where the volume spiked quite a bit, like because there's only a certain amount of space allocated to the volume part itself. When something like this comes up, everything becomes smaller. So you have to kind of move this away. And when you're trading in the moment, all of your bars, like when you're trading at 5 o'clock in the morning or whatever, like 6 o'clock in the morning, all of these
Yeah.
bars are, like they're much smaller until you start seeing the volume come in. That's when these become smaller and these will get bigger, and you'll get an automatic idea, that hey, this was really nice and small, and now these are starting to get bigger. What is happening? And you'll see that price is going up with it as well. So in the moment, it's much more easier to see the 8 o'clock bump and the 9:30 bump in volume, like regardless because of the market opening up. It makes it a little bit difficult for these volume bars to see, like in when you're retrospectively looking at it.
Understand. Because I'm seeing the volume bar as pretty much the same size on my end. That's why I was curious how your bars are much larger
Yeah.
compared to mine.
Yep, I'm not looking at this bar that came in at 8 o'clock in the morning. The This bar that came at 8 o'clock in the morning,
Yeah,
this destroys everything. If you don't have that in your view, you should be seeing them much better.
yeah. You just did it. That's the way I'm looking at my bars. I was like curious
Yep,
how your bars are different than mine. But thank you for explaining it for me.
you're welcome.
And you don't use the RSI when you are trading, I mean, MACD?
Not really. RSI for me doesn't matter in the moment because I trade for like a couple of minutes, maybe 20 minutes, 30 minutes, something like that. RSI is just it, it is it basically showing you. Yes, it shows you oversold or overbought, but you could have an overbought chart. Like if you look at Nvidia, for example, take a look at.
Hmm. So you mostly rely on MACD and your chart?
Yep. So
Okay.
I don't remember how to add stuff on it. Let's see. Nvidia RSI. How do I add even? Haven't added an indicator on my thing in a while. Indicator somewhere here. Indicators. Where's RSI? Where's RSI? So let's go on the daily.
So your normal trade is like 2 minutes?
Yeah, a couple of minutes, not 2 minutes, but a couple of minutes. So look at this. This is Nvidia, right? Was nobody buying
Yeah.
Nvidia at this point in time when RSI was 78? Do you see how the price action is? Do you see how price
It's
going
going
up?
up, but yeah, the RSI is going down.
Yeah, RSI went down in the middle for a little bit, but this whole time where Nvidia went from 50 to probably what? 50 to probably this is 80, which is a
Yeah.
50 to 80, which is like a 50% increase almost, right? The RSI was
Yes.
all in overbought territory. Didn't really matter, right? RSI was up,
Yeah, the stock was still
was up.
pumping.
Yeah, you have to look at it from a perspective of, what price action is doing to interpret RSI. RSI is really like, I know people base their strategy on it. For me, it doesn't show, it doesn't deter me out of a trade at all. Like, for me, the only two things that matter is price and volume. If price is going up and volume is there, I'm perfectly fine not looking at anything else and following the trend. That's all.
Yeah, but some traders they do say, oh, when the RSI is like over 51, maybe you go for calls, and when it's like under 49, you go for puts. Is
Yeah,
that logic true, or
the,
they just saying?
there are better ways to go into. There are more. Yeah, there are definitely better ways, and you definitely need a lot more than looking at RSI to go into calls or puts. Like RSI is probably the last thing that I would look at before I decide whether I want to go into calls or puts, because you have to look at what direction the price is headed, what support levels are coming near it, what it's been doing, because the concept's the same, right? Like if I wanted to take a look at Nvidia and be like, oh, I want to take calls over here, but this is at 80, do I take
Yeah.
calls on this or no? And by that theory, like if you look at even 50, where it was at 50, right? 51, let me put it this way. 60, let's put it at 60, right? At that point, the price for Nvidia was in the 40s, and the RSI went all the way into 80s, and we were still climbing, right? By that theory, this is, you know, doesn't make any sense, right? So you really have to. If somebody says that in isolation RSI will determine anything, that they're absolutely wrong. I don't like saying this, but that is wrong to say. I'm sure, like there might have been some more context to it. Like you can look at price actions and all of that stuff as well. But RSI in isolation doesn't tell you anything in my mind.
All right. Thank you for explaining.
You're welcome. And the other thing is like a lot of people get confused with MACD as well. MACD is literally based on EMAs. So people get confused by this as well. Like this is basically the bars that it shows is basically the difference between the MACD line and the signal line. And the MACD line is I think a 9 EMA, like a 9-day moving average line. So this is all that the bars only tell you this. The bar helps you visualize how far these two things are. That is all it shows you. So, MACD has its own utilization, but it's a lagging indicator, so it can never tell you what's gonna happen. It tells you what has already happened, so you can take that into account.
So it doesn't see the future. It's
Nothing
current.
if something saw the future, we would not be here, right? Why would somebody told me that there's a indicator that can tell you what's gonna happen ahead, we would all pay that $10,000, $100,000 to get that because it's going to be very easy to make that money back, right? So all
Yeah, but some
indicators.
port status say that when the MACD is curling up or curling down, you can probably guess where the direction is heading, the stock.
So you don't. So the MACD tells you where the EMAs are going, right? The MACD is based on EMAs, moving average, right? So you can
Yes,
see this. You can see this, right? Moving average moving up, MACD moving up,
yes,
MACD line moving up, right? It's not very. People
yeah.
make it sound very complicated. It really isn't. Um, so MACD is based on the signal line is a long-term EMA. The 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 orange line that you see is the 9 EMAs. If you look at the 9 moving average over here, these days 1, 2, 3, 4, 5, like this is all moving up. That's why this is moving up as well. The bars just show you the difference. So yes, if there's a crossover, it tells you that on the short term, price is moving up, which you can actually see over here. In the short term, price is moving up, right? It shows you
Yes,
exactly what's on the chart over here. It just makes it easy to visualize. That's all.
understand. So when you are day trading, you take your trade based on 5 minute or 1 minute.
Both. It so 1 minute is where I do my execution. 5 minute is where I look at trends. So we were going over this MLGO trade, right? Um,
Yeah.
so the 1 minute tells you because the 1 minute has like these huge candles, right? Like you see these. Let's go to the 1 minute. There's a lot of volatility sometimes in it, like moving up and down, like chicken scratch, absolutely. So the 1 minute helps you show like the acute trend, like how everything is moving, like what the sentiment is, but it never shows you like when things start to retrace back down, it doesn't show that really clearly. So the 5 minute helps you identify whether something is done absolutely or it is just taking a breather. So both those things matter to me because if I can see something that something went up over here and it cooled down a little bit and then started going back up and then cooled down a little bit and started going up, then yeah, I would absolutely, want to get the higher price. But when it starts to show that it's going down and it continues to go down, then I want to get out of that trade. So the 1 minute helps you execute it. The 5 minute helps me um, identify whether a trend is broken or not.
So what's your strategy to exit out on 1 minute? Like on what level you would consider, okay, this is time for me to exit
So
from the
I
trade?
so I don't I don't, let me put it this way. How do I put it? I scale out at different levels. So in an ideal trade, if I would have entered like the way I entered over here, I would have taken profit at each one of these levels. Now everybody has their own percentage or their own risk parameter as how they want to take it. I generally take it either in four parts like 25, 25, 25%, like I'll come out, or I'll do 33%, depending on how much volume or um, how aggressively the price is moving out. If you see something is squeezing really hard, then you can reserve maybe some of it for later. But generally, I try to take it. So what I would do is if I entered at 2.25, I'm 10% up. At 2.6, I'm about
Mm-hmm.
25, 30% up, right? So I would take 25,
Mm-hmm.
33% over here, 33% over here, and I'd be like, yeah, I would wait for the $3 level to hit, and if it doesn't, then I would start taking most of it, like that 25%, like because this is where I thought that this is topping out. So I think my last 30%, I had 3 or 4% left, maybe. And I was like, if it goes a little bit up, maybe I can use that 3%, but I want to lock most of my profits in. Because from here, this is a 40% trade. If you got in at $2, At
Yeah.
2.8, you're 40% up. That is like I know people don't. I don't know why people don't say this, but 40% is a lot of money on a stock. Like a lot. If you can make it in I don't know 10 minutes or so, like that trade should
Yes.
be able to get you like be done for the day pretty much. To be fairly honest, I know we all of us like to keep going, but 40% on a stock is a lot. It's a huge move, right? If you can catch that.
Yeah.
Um,
So let's say if I'm a new trader and I take a trade around like 270 or 280, and the moment I take the trade is going backward, it start going down. So what would you say? What would be the best place to exit out this stock?
So if I would have like bought it at 280 and it started going down,
Yeah.
I so for new traders, let me put it this way. When I started trading out, somebody told me this, um, to if you cannot assess the price action, like how it's going down, how the chart is going down,
Yeah.
where the support levels are,
Yeah.
where the resistance are, where EMAs are, set a loss that you can tolerate and get out of it no matter what. For me, I decided that it was 3% for me because I used to take profit at 5 or 6%. If I got in, if somebody gave me an alert at $2, I would
Mhm.
set it at 6%, I would take my entire position out and stop looking at it. That was to practice um, the habit of taking profits and not FOMOing into stuff and not being like, oh, other people made this one because I had a lot of FOMO when I started trading out. So that was to erase that habit. So I used to take my entire profit. If I entered at 212, I would take the whole thing out. Didn't matter. But I
So you're
also
saying the risk and reward is like if you lose 3%, you would get out, and if you go over 6%, you would lock the profit. That was
I
your strategy at the
that
beginning.
that is what I did. Yes, that is what I because I had to lose two times to make up for one win. Right? I had to do two
Yeah.
bad trades to make one good trade. Um,
Yeah. It make more sense.
So that was in the beginning, right? I was small size. I used to trade like 10, 20, $30 worth of stock, nothing more than that ever, until I did like almost a
Mm.
hundred or so trades, I think. Maybe a little bit less, maybe a little bit more, something of that sort, right? And then I gradually increased my size. At that point, I could, when I used to do those things, I used to go back and look at this whole thing of how it played out, where it bounced, why it bounced. You know, if I got in over here, what would I have seen that, I would have maybe that price came up over here, so I would have been able to get out over here. Those are things that you really need to be cognizant of because, when this starts to drop, you don't know that this is going to stop over here, right? You already went from 2.8 to 2.3 and actually it came down all the way to here. So this was 2.2. So you already lost um,
Bro,
30%
50
almost,
cents.
25, 30% almost of your position size, which
Yes.
is a horrible feeling at that point in time, right? Um,
Yeah.
versus if you
I mean,
would have
that's
gone
what, as a new trader, we don't know like how to exit out quickly. Like we say, oh, maybe the stock gonna go back up.
in.
Sometimes we attempt to buy more, but we ended up losing more and more.
Yep. We trade with our hearts, not with the chart, right? So yeah, so the first piece of
Yeah.
advice for me that I would give to everybody who's starting out, if something has run 20, 30, 40%, just don't touch it. Like especially if you cannot evaluate, and there's no harm in this, by the way. Like there's no, like, somebody sat me down very early, or not very early, very early in my serious trading career, let me put it this way, which was 8 months back maybe, or 6 months back, that there's no shame in knowing that I cannot evaluate this trade. Like if you think something's gone up 40, 50, 70%, and you think that this price action doesn't make sense to me, don't touch it. There's always another trade.
Understand.
Always. Every day there's something that runs 100%, 200%. Every day. You can ask me to run a search, I will show you. Every day there's something that runs 100%, 200%. Every couple of days you'll see something
Yeah.
that runs 4, 500%. It has been happening. Like I've been trading for seriously every day for 7 months. I've seen that happen every day and every week. And it will keep on happening every day and every week, right? So don't think that this
Yeah.
won't come again. That opportunity will always come again. But the problem that what won't come back is the money that you've lost. And it's very morally defeating as well. So keep your losses small till you can actually read a chart and assess that, hey, I bought it over here. Now it's breaking the support level that I had drawn. Like if you look at the daily chart. Oh, what happened there? Was you? Jesus, what is that about? Okay, this is one before. Okay, like what happened over there? So this is MLGO's daily chart. Actually, we're gonna go on the 4-hourly chart because it's nice to assess that, right? So these are like support and resistance levels, right? We've taken these from different points in time, right? Where price was fluctuating, where price bounced really nicely. So you have to assess those as well, right? And in these, you also have to look at where these support levels are strong. Like this level over here, the price bounced over here for a long time. The price bounced over here for from 15th to the what is this? To the 20th. So like 15, 20 days almost bounced over here. The same over here. So this 1.5 is a really nice level, right, for it. Other levels might be, when something touches only once, it's not that strong of an area. So you have to keep all of those things in mind where you're looking at a chart and assessing it that, hey, where did I buy this? What did this support resistance level mean in the larger context of it? So if that is something that you're not able to do in the moment, just don't touch it. And if you feel that, oh yeah, this is already, I started out when it was 60% up and now it's starting to go down, cut it fast. Make your own. I'm not saying use 3%. I'm saying make your own risk tolerance. It could be 5, it could be 4, it could be 1, whatever you like. 1 is probably too early. Things fluctuate quite a bit, but
Yeah.
make your own risk tolerance that you are willing to live with and sleep at night, and you can go from there.
All right. One last question. What do you recommend to learn the charting? Is it the candle more important, or doing like different kind of bull flag,
So
bearish flag?
it's difficult to say one thing that can improve it. The thing that helped me the most is drawing charts, like drawing support and resistance levels, these ones, and then following
Yeah.
trades on them to see how they reacted. Webull has this very nice feature where you can, like, for example, if you can look at the top 4 stocks of the day, like, the top gainers, where you can actually replay back the whole day on it. So what you can do is you can start, like, you can draw your levels on it and then replay this day back on it, and then see how it bounced, where it bounced, how your levels, like the support and resistance level that you drew, how they reacted to it, which chart or which EMAs it reacted to, and where would your entry point have been, where your exit point would have been. A lot of it, I think the thing that helped me the most was actually drawing on these charts every day, and just keep looking back at it. How did this play out? Where would I have exited? Where would I have exited? Where did I started looking at, this could have gone horrible for me, where? All of those things, you have to play those things out in your head. And then eventually when you start taking those trades, like once you get good at drawing these support resistance levels really fast, you start taking the trades with small numbers. You can trade 4 shares. There's no harm in doing that, right? With 2, 3, 4,
Yes.
whatever you want, and just follow the price action. And see how the price goes up, how the price goes down. Did you manage your risk? Did you go in with a plan? Did you follow that plan actually, like after going into it? Um, and if you feel that you're consistently profitable, then you can keep increasing your size, because size in itself has a huge emotional component to it as well. For me, it's probably the most difficult thing even now. I cannot trade with a huge size. It just doesn't go well for me. So I'm still trying to size up to a position where I'd be comfortable, where I want to be. I really want to be, like trade with I don't know, like $1,000 maybe as an opening position. I still can't do it with that because I can't handle the loss when it comes in. Even though I can handle, like, being down 10, 15%, that's okay. Like I can carry something like when I'm swinging. But once you go to $1,000, you realize 15% becomes $150, and I'm just not okay with, you know, carrying that much loss from today into tomorrow. So again,
Yeah. I
psychologically
mean,
building that.
losses add up. One day you lost 150, another day you go and you trade and it goes again, right?
Yeah.
So, you know,
So you have to watch that psychological part of it. So you have to build that up. And we say this, Smooth, me and Mo, and we all say this. If somebody's told you that you can learn trading in the next month, 2 months, 3 months, 4 months, I'm sorry, somebody lied to you.
yeah, it definitely takes some time.
Yeah, it's gonna take a lot of time.
Yeah,
I'm gonna be honest with you. Just like any highly skilled profession, like like a doctor, lawyer, engineer, you choose it, whatever you want, like advanced, firefighters, whatever. You don't get to do these things after being a month in it. It just doesn't happen. Not 2 months, not 5 months. It takes a couple of like if you dedicate like hours and hours, maybe a couple of months at least, if not a year. Like these things take time, so don't rush your process, and it will take time. I'm sorry to say this to people, but that's the truth of it. People get really discouraged when I say this. I'm like, if somebody would have told me this rather than losing, whatever $5,000, $10,000 that I lost over this journey, I would rather have taken that advice.
yeah, absolutely agree with you.
Another thing worth mentioning, you're gonna take a lot of losses at the beginning. They're just all part of the learning journey. Anyone who decides to trade as like a full-time profession, as that's their goal in life, and their financial security in life, usually the people that start to do this full-time, um, it takes about 2 years before they have consistent returns, in the sense that their losses consistently are much, or their gains are much more than their losses on a consistent basis. And then on top of that, add another few years, and then that's when they quit their job. So if that just kind of gives you a perspective of, it's not a process that you can rush, right? And on average, it takes about 2.5 years, for your gains to outweigh your losses. And then, on top of that, even longer to make this your, full-time job. That doesn't mean that it can happen for sooner. It happens. Many people have this ability to have it happen sooner. One of the ways to help increase the chances of it happening sooner is to be part of a community, have a mentor, ask questions, engage, and so on and so forth. So that way you can accelerate your learning. So you're not doing it all by yourself. You can learn the mistakes of others, so you don't have to follow suit the same way.
Yeah, we've paid that tax already. Don't
Yeah,
worry.
thank you so much for explaining. I appreciate for the insight.
You're welcome. All right, guys. I think we've gone pretty long. If you guys have any questions, feel free to throw it out on the chat in the journal forum, or you guys can tag us with it on the forum itself. And I'm sure one of us will definitely like even in the next hour or so we can respond to all of these questions as well if you guys want. Oh, we'll do this. We'll put it on the um, Smooth is gonna put it on the general room about how to choose a custom role.
Yeah, I it's already on the general roll. So if before you guys head out for the night, is just take a look at that channel there, and in general, and just take a look at the channel, see what roles and will apply to you. Just to keep it minimal. Yeah, we'll add everyone occasionally, but we're trying to keep it more informative